The point is that the Chinese, as a nation, are a saving nation. It's estimated that Chinese households save 35% of their income. Now, 35% of their income is around about $6 trillion on Chinese GDP. So $6 trillion, where does it go? Property? Yesterday's story. Stock market? Not really. It goes into bank accounts and it goes into gold. And I think it's increasingly going to go into gold and also silver, because Chinese individuals can't go and buy foreign currencies or foreign stocks or anything like that. They don't have these avenues which we have become accustomed to. Whether the avenues are good or bad, it's a secondary question. But as far as the Chinese individuals are concerned, their banks will offer them the facility to deposit money, currency, in yuan accounts, or alternatively in gold accounts. And as long as you've got a minimum of about 500 or 600 yuan, which is about $80 or something, you can open a gold account and you can accumulate your savings into that. What does the bank do? Well, the bank has to go out and cover these liabilities. Now, it might do it on a fractional reserve basis, I don't know, but I doubt very much that that's going to be the case. I think they will try and back it with physical bullion as much as possible. Of course, we don't see this necessarily because the accumulation of gold reserves, say at any of the major Chinese banks, will be in the Shanghai Gold Exchange vaults. So this isn't going to be delivered to the public, which incidentally has already delivered something like 27,000 tons of gold into the public. So, this is gold. This is why gold is moving. The pricing of gold has actually moved to Shanghai. We're just dealing in sort of paper, which pretends to be the real thing. But it's not. It's not. So these are interesting times, if I can say that. As the Chinese would say, live in interesting times. Long before the Chinese people were allowed by the government to accumulate physical gold, the People's Bank of China was accumulating gold for the state, and it was siphoning this off into various state accounts to hide the degree of gold accumulation. They were appointed to do this by law, and I've got an English copy of this law, back in 1983. And it wasn't until 2002 that they suddenly turned around and said, okay, we'll let the people buy gold, and we will set up the Shanghai Gold Exchange, which is controlled by the People's Bank, incidentally, in order to facilitate them to do this. And then they started advertising to people, rush out and buy gold. This was the Chinese government advertising, the merits of owning gold and all the rest of it. So, the state, I reckon that by the time 2002 arrived, and remember, we're looking at a market which was a bear market in gold. Gold was being, if you like, rejected by the Western capitalist fiat money system, so much so that it went down to, around about $250, from sort of, a very brief peak at over $800. And it was during that massive bear market, when everybody in the West was getting rid of gold, that China was quietly sort of buying it in. They were the hidden buyer of gold. And they've accumulated it. I reckon that by then they'd probably accumulated something like 20,000 tons at contemporary prices. It just made an awful lot of sense because, China wasn't exposed to Keynesian economics, and therefore they understood that gold is true money. And I understand that even in Mandarin, the word for gold is the same word as for money. So, we know what how they see this.
In the grand scheme of things, the value of gold and silver increases as the dollar declines. It's not that these precious metals are skyrocketing, but rather that the dollar is losing its purchasing power. JP Morgan has highlighted that the dollar's decline is inevitable, and this is a likely outcome. Observing global trends, the shift away from the dollar and the formation of new alliances among countries signal a move towards alternative currencies. Why hold U.S. treasuries? Gold has consistently outperformed treasuries, with an average annual return of 99.9% over the past 25 years, doubling the pace of the 10-year treasury. The global community has seen the U.S. use its financial instruments as tools of conflict, which erodes trust and drives nations to seek alternatives. Zoltan Pazar and other experts point to the emergence of Bretton Woods III, which focuses on commodities as the new foundation of the global financial system. The U.S. faces significant challenges in meeting its financial obligations through tax revenue alone. Options are limited: raise taxes, print more money, or monetize debt. With $8 trillion in foreign-held treasury holdings, the desire for U.S. debt is diminishing. Countries that once favored treasuries are now hesitant, further deterred by risks of inflation, default, and outright confiscation. Central banks are now accumulating gold at record rates. Gold has surpassed the euro as the second largest asset held by central banks, with an 18% allocation. This is a major shift. Gold and silver are replacing traditional assets, indicating a broader move towards commodities. Pazar emphasizes that this shift is about real commodities, not the promises of financially unstable nations. China's gold accumulation is a prime example. Officially, China reports holding around 2,700 metric tons, but experts believe the actual amount is much higher. Like many countries, China underreports its gold holdings. Central banks are purchasing gold extensively, a trend likely underreported. Analysts from institutions such as the IMF and the Bank of Montreal agree that official numbers are conservative estimates. India has also significantly increased its gold purchases, buying 1.5 times more gold in the first 4 months of this year than in the entire previous year. Additionally, countries like Saudi Arabia and Egypt have repatriated their gold from the New York Federal Reserve, eliminating counterparty risk. This trend of repatriation signifies a major shift in global trust. Gold's reclassification as a Tier 1 asset by the Bank for International Settlements, BIS, in 2019 underscores its importance. Silver, often following gold, is also expected to rise. The global trust in the US dollar and treasuries is waning, replaced by a reliance on tangible assets like gold and silver. The shift towards commodities is evident. Central banks' relentless gold buying speaks volumes. Trust, once broken, is hard to restore, whether in personal relationships or global finance. The repatriation of gold reflects this loss of trust. Countries are increasingly viewing commodities as safer, counterparty risk-free investments. The push to accumulate tangible assets like gold and silver is further driven by growing geopolitical tensions and economic uncertainties. Nations are cautious about relying on a financial system heavily influenced by U.S. policies. The strategic move towards gold and silver is seen as a safeguard against potential economic and political turmoil. This trend is about more than just protecting wealth. It's about gaining control and independence in the global financial arena. As the dollar's dominance diminishes, the move towards commodities represents a significant reordering of global economic priorities. Gold and silver are becoming central to the new financial architecture, no longer just hedges against inflation. This transition is expected to accelerate as more countries realize the benefits of holding assets with intrinsic value. The focus on commodities highlights a broader understanding that true wealth and stability come from assets with inherent worth.
I think there's a misunderstanding about what $2,400 gold price really means. I mean, we can illustrate this with the actions of the People's Bank of China. Read all the headlines. The People's Bank of China has been buying gold. That's actually got it completely the wrong way around. What the People's Bank of China has been doing is selling dollars. And the distinction is terribly important, Kai. Understand that it's a distinction and you'll understand actually what's happening. Because what the People's Bank of China is in effect saying is we think the purchasing power of dollars in our reserves is going down. Now, there are various reasons why that might be the case. But it is the purchasing power of the dollar falling, not the price of gold rising. And this is where everybody gets gold wrong, and particularly the establishment, the bullion banks in London, the swaps on COMEX, all these guys, their only experience has been in a fiat currency environment since particularly the mid-1980s, when everything was financialized with Big Bang in London and so on and so forth. So what they're doing is they're trading something, they account in dollars or they account in euros or pounds or whatever. So their comparison is profits and losses measured in the fiat currencies. But actually in monetary terms, because gold is legal money without counterparty risk everywhere, and euro and mine currency are not counterparty risk free, and they're not used everywhere, you can see where the risk is. The risk is in the fiat currencies. So, on that basis, what we're seeing with People's Bank of China and also all the other central banks who are doing exactly the same thing is they're sending a very clear signal that they're seeing the purchasing power of fiat currencies declining. So where do you get out? I mean, do you sell dollars for, yen? Well, we've just knocked that argument on the head. Euros? I mean, the answer, Kai, is that, the dollar is the king rat of currencies. It is the number one fiat currency. And if you're going to get out of the dollar, you've got to get out of fiat currencies, full stop. And you've got to go into gold. And this is the conclusion that central banks around the world have woken up to. And of course, this also doesn't augur well for US debt funding from foreign sources. I think what we've seen sort of part one of the new bull phase, that was a run up to 24.45 or whatever it got to. We're now consolidating that, and we've been consolidating that for the last 2 months or so, 2 or 3 months. And at some stage, that consolidation will end, and off we go. But as I say, what it's actually about is the declining purchasing power of the dollar, which we're talking about when we look at the gold price, or if you like, the dollar priced in gold, that's going to continue to decline. I mean, what gives the dollar its value? I mean, we're talking about bits of paper or units on in some sort of electronic account. It's just faith in it. It's just faith. That's all it is. What gives gold its value? Well, you can actually hold it, and it's legal money.
Chinese culture highly values savings, with estimates suggesting that Chinese households save about 35% of their income, totaling around $6 trillion based on their GDP. Historically, these savings were invested in property and to a lesser extent the stock market. However, there is a noticeable shift towards gold and silver. Unlike in Western countries, Chinese individuals face restrictions on purchasing foreign currencies or stocks, leading them to seek alternative avenues for their savings. Chinese banks now offer the facility to deposit money in yuan or gold accounts. With as little as 500 to 600 yuan, approximately $80, one can open a gold account and accumulate their savings in gold. What do the banks do with these deposits? They must cover these liabilities, likely by backing them with physical bullion. The accumulation of gold reserves by major Chinese banks is often reflected in the Shanghai Gold Exchange's vaults, though these transactions are not always visible to the public. Since 2002, when the Chinese government began encouraging its citizens to buy gold, the market has seen significant growth. The state's efforts to accumulate gold started long before the public was allowed to do so, with the People's Bank of China secretly acquiring gold during the bear market when Western countries were offloading their gold holdings. By 2002, China had likely accumulated around 20,000 tons of gold at contemporary prices, recognizing gold as true money. Even the language reflects this understanding, as the word for gold in Mandarin is the same as for money. This cultural and economic context underscores why the Chinese government and people place such a high value on gold. There's a common misunderstanding about the rising gold prices. When headlines state that the People's Bank of China is buying gold, what's actually happening is that they're selling dollars. The focus should be on the declining purchasing power of the dollar, not just the rising price of gold. The value of gold is inherent, while the value of fiat currencies, like the dollar, is based on faith. The People's Bank of China, along with other central banks, is signaling a decline in the purchasing power of currencies. The logical move is to shift from dollars to gold, as the dollar is the king rat of fiat currencies. The declining purchasing power of the dollar is evident, and this trend will continue. The value of the dollar is based on faith, whereas gold's value is tangible and recognized globally. As the gold price consolidates, we are likely witnessing the beginning of a new bull phase. The declining purchasing power of the dollar is a crucial factor driving this trend. The question of what gives the dollar its value is increasingly relevant. Unlike fiat currencies, gold's value is tangible and globally recognized. The shift towards gold and other commodities is a clear indication that countries are preparing for a future where the dollar is no longer the dominant global currency. This preparation involves not just buying gold, but also establishing systems and alliances that support a more diversified and stable economic framework. Countries are increasingly viewing commodities as a safer investment, free from counterparty risks. The accumulation phase is marked by secrecy, with countries like China and Russia quietly building their reserves. The strategic accumulation of gold and silver is a response to the growing uncertainty in the global financial system. Central banks are not just buying gold, they are signaling a shift towards a commodity-backed financial order. The reclassification of gold as a Tier 1 asset by the BIS is a clear recognition of its enduring value. Silver, often overshadowed by gold, is also expected to rise due to growing industrial demand. The strategic accumulation of silver by countries like China and India underscores its importance in the emerging financial landscape. The secrecy surrounding gold accumulation is strategic. If the true extent of gold purchases were known, prices would skyrocket. Countries have a vested interest in keeping their gold-buying activities under wraps. This stealth accumulation phase allows them to build substantial reserves without driving up prices. The erosion of trust in the US dollar and treasuries is evident. Countries are diversifying their reserves, shifting towards tangible assets. This shift is not just about financial returns, but about reducing dependency on a volatile and increasingly politicized financial system. For American and allied viewers, it's essential to recognize the strategic importance of gold and silver in protecting your wealth. As the global financial landscape shifts, holding tangible assets like precious metals can provide a hedge against economic uncertainty. Investing in gold and silver is not just about financial returns. It's about preserving your financial sovereignty and reducing dependency on a volatile financial system. By accumulating gold and silver, you are positioning yourself to weather economic storms and ensuring that your wealth remains secure in an increasingly uncertain world. Remember, it's not just about the immediate financial gains, but about maintaining long-term stability and control over your financial future.
If you want to stay most up-to-date on the silver and gold markets, make sure to subscribe to my daily 5-minute silver and gold newsletter. It provides the latest expert insights, breaking news, market trends, and investment strategies, all in a concise format. Click the first link in the description to join thousands of others and enhance your investment knowledge right now. If you enjoyed this video, please give it a thumbs up and subscribe to my channel. Your support helps me stay motivated to bring more valuable content to you. See you in the next video.